Prepare yourself for an exclusive glimpse into something known only to a select few, dating back to 1875, the Benner cycle. And let's analyze it and decide whether this tool might help us in indicating the next bull market or not. Stay with us to find out. In this video, we will be analyzing the entire 20th and part of 21st century to see if we have any kind of correlation with this cycle. Let's start from the year 1927. In 1927, there was a banking crisis. Its macroeconomic impact was negative but not catastrophic. However, the worst macroeconomic downturn would arrive a few years later when the Great Depression, 1929 to 1939, took place. It was an economic shock that impacted most countries in the world. It was the longest, deepest, and most widespread depression of the 20th century. Economic historians usually consider the catalyst of the Great Depression to be the sudden, devastating collapse of U.S. stock market prices, starting on October 24, 1929. However, some dispute this conclusion, seeing the stock crash more as a symptom of the rising nervousness of investors due to falling sales of consumer goods that had been underway as part of a gradual depression. Let's take a look at another spike in the year 1945. At the end of World War II in 1945, the United States economy dipped into a sharp recession lasting 8 months. It was a hard and fast fall that also correlated with the cycle. Now let's move to another spike in the year 1965. 3 years before that, the Cuban Missile Crisis took place, and it was a time when the United States intervened in the Dominican Civil War. The Missile Crisis was a 35-day confrontation between the United States and the Soviet Union, which escalated into an international crisis. The confrontation is often considered the closest the Cold War came to escalating into a full-scale nuclear war. Let's move on to the next spike, the year 1981. In that year, we had the early 80s recession that affected much of the world from 1980 to 1983. This recession was predicted by 1981. It is widely considered to have been the most severe recession since World War II. A key event leading to the recession was the 1979 energy crisis, mostly caused by the Iranian Revolution, which disrupted the global oil supply, leading to a sharp rise in oil prices in 1979 and early 1980. So the next stop is 1999. Let's journey through history and observe its track record, starting with the bursting of the dot-com bubble. The year 1999 is significant for insane internet stock growth, rising over 1,000% in value. It was a year when more stocks fell in value than rose in value as investors sold stocks in slower-growing companies to invest in internet stocks. In the beginning of 2000, the dot-com bubble eventually sent shockwaves across the globe. Companies surged and tumbled, with an 80% crash echoing through time. This marked the dawn of a new millennium, catalyzing a seismic shift for technology and internet firms. And here is one more timeline to consider. As we journey to 2019, it was the exact year when the COVID pandemic started. The recession began in most countries in February 2020. After a year of global economic slowdown that saw stagnation of economic growth and consumer activity, the COVID-19 lockdowns and other precautions taken in early 2020 drove the global economy into crisis. Within 7 months, every advanced economy had fallen into recession. Now let's connect the dots. As we all know, it's inevitable that after every downfall, there is a rising period. And as history shows, those downfalls may take much less or much more time, but the main spikes on the Benner cycle showcase the exact year when an event occurs that leads to severe economic depression after all. That's quite impressive. Remember that the stock market has a high correlation with the crypto market as well. So, it might indicate that we are on our way to a rising period and a bull market. When is the best time to invest? Now. Don't forget to share your thoughts on this. For more insights and guidance, connect with us and visit our website at sentia.io.